Hello everyone, has you encountered this before? Had a nice gain, but regret for not selling at the high and see the gain is wiped out or turned into loss, or enter the stock because of the hype, but then it just crashed whenever we bought it. If there is a simple method for us to identify the top is coming, so we can protect our gain, or at least not going to be trapped at the top. Are you interested to know it? In this video, I will be sharing stage analysis on phase 3 and phase 4 on how we can identify a top of a bull trend. I will be using some recent examples in this video. Let me pull out the chart to illustrate the 4 stages of a major cycle again. In my last video, I have talked about stage 1 and stage 2 on the best forming and advanced bull run. If you have not watched it yet, please click the link at the top right corner to get the full picture. There is a statement saying, all good things must come to an end. Stage 3 is also called the top area. This happens when the stock at the stage 2 or the advanced stage start to lose its momentum and trend sideways. Here, the buyers and sellers are at equilibrium, where the buying and selling force are almost the same. At this stage, it is like a mirror image to the stage 1. To identify stage 3, we can use weekly MA30. First, the moving average 30 will lose its outward slope and start to flatten out. When the stock is consolidating at the top, the stock is now tiptoe below and above the moving average 30. If the volume is heavy here, it is a warning signal the top may be formed. I will use some examples later. When the stock breaks below the MA30, it will enter stage 4 and we can anticipate a choppy movement. Similar to the stage 1, since phase 3 is a potential top, shall we sell our stocks, either cut loss or profit take? The answer is yes and no. First, stage 3 maybe break out on the upside again and start another stage 2 without going through stage 4 and stage 1. Thus, money management is important. One of the best ways is to sell half and hold half of the original position. Then, we will be able to benefit from the outward movement of the new stage 2. At the same time, we place stop loss for the remaining half slightly below the support, which is below the moving average 30. If we hit, we get out of the positions before the crash happens. Stage 4 is the declining phase. This is where the disasters face to most of the investors and wipe out a lot of gain or even the capital of investors. This is a period when the stock price is fatigued and facing pressures of fearful sellers. It will first break below moving average 30, then MA30 acts as a strong resistance. Take note that while in my previous video I mentioned that we need a strong volume to support the breakout before entering an advanced stage 2. A downside break into stage 4 does not need such a huge increase in volume to be considered valid. Just imagine if we cycle uphill, which needs a lot of energy, versus it is a lot easier if we cycle downhill. In stage 4, we should never buy stock when moved into stage 4. For short-term or mid-term positions, time to sell them, either cut loss or profit take. For long-term positions, do some protections such as hedging with put options. For some traders, it is time to short the stock to get more profits. Although the market is moving in cycle, after stage 4, stage 1 and 2 will be coming. If the stock is gaining back the strength or with superb fundamental. However, at stage 4, when the challenge is huge, it is absolutely not easy to just see our hard-earned money or profit go down the drain. Many investors or traders hold many stage 4 stocks, think they will be coming back, but the time can be months or even a few years. They lose patience and quit the market. Okay, now let us look for some examples on how the stage analysis can help us identify the top to profit take or cut loss. The recent crash of QQQ. On 17 January 2022, the weekly candle closed below moving average 30. The MA30 was also flattening. This is a suggestion that the market was topping. Thereafter, the market crashed and went into the bear market stage 4. MA30 has become a strong resistance. Now, the price is testing on the moving average 30 again. The recent rally does not have a convincing volume. Also note that the current downtrend is still prevailing and MA30 is still slipping down. I anticipate the price will need more time to cross above the moving average 30 and a retracement is coming. Let's see the extent of the next retracement will be going. As long as it does not break below the previous low at 269, it is a good news as the base could be forming. When the stock crosses above moving average 30 and MA30 is flattening, we will be in stage 1 and we shall get our cash ready for the next bull run when stage 2 starts. If you look on the SPY, a very similar pattern is observed too. On 17 January 2022, the candle closed below MA30. The key difference is MA30 was flat instead of swooping down until April 2022. It is now going to test the MA32. Next, let's look on a speculative growth stock such as ARKK. Speculative growth stock had nice run after the COVID-19 crash. However, when the stock first closed below weekly MA30 on 22nd March 2021, it was a warning signal that the stock bull run may be over. Then, the stock consolidated for almost 8 months, a typical stage 3 pattern. During this period, MA30 was flattening, and most of the time, the price was below MA30. Thereafter, stage 4 kicks in and the stock crashed later. Take note that if we bought the share at the early stage 2 and sold at the top, the gain will be almost 240%. If we sold at the price where it crossed below MA30, the gain reduced to 130%, but it is still a nice gain for 1 year profit, right? If you hold the stock till today, the gain is only around 3 to 5%. Before that, it is a loss. From a gain of 240% to a net loss, definitely it will feel good. My last example will be oil stock. If we take XLE as an example, early stage 2 was around November 2022. Note on the 21st March 2021, where ARKK closed below moving average 30. XLE is in a nice stage 2 at once run. Thus, stage analysis can also help us to transfer our money to the leading stock. If we move the money from ARKK stage 3 to XLE stage 2 stock, instead of suffering a huge loss later, you will be able to reap off another 90% gain of the oil stock surge. By the way, in my opinion, the commodity bull run is over, which I will talk more about it in the next video. We shall look for the next video now. Please revise my previous video on stage 1 and 2, then combining with stage 3 and stage 4 video here. It will definitely provide some new insights on how to build the market or the individual stock. That's all for today. Thank you and see you in the next video.